It's time for the Brian Beatty Real Estate Show.
Good morning, Charleston. Welcome to another edition of the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. I'm your host, Brian Beatty. 13 years I've been on this program helping you guys better understand the real estate market, the trends within it, the process of buying a home, selling a home, investing in real estate. This is a show that just takes the gloves off. There's no sales pitch here. It's just an opportunity for you to listen and learn about real estate. So that's what this show is all about. I've been selling real estate locally for about 20 years. I've sold about 1,500 properties, about $1 billion worth of real estate in that time. And so I share my experiences with you to, again, help educate and inform you, not just on what's happening in the market and how that relates to maybe the value of your home or, purchasing a property, but the process in general, right? This is an educational program. There's really nothing else like it out there. It's very challenging to find radio-related content that isn't, purely investor-driven. There's some great podcasts out there for investment in real estate. This talks about the everyday transaction. Someone sells a home, buys a home, thinking about the market. Maybe they want to invest in the market. That's what this show is all about. So thanks for joining me. Really, one of the things I want to talk about first is just how to identify what your house is really worth. It's challenging in a market like this. Frankly, it can be challenging in any market. It depends on who you're working with and the process that they're taking you through. But I want to talk about how to really understand value in real estate, because a lot of people make decisions, like when they're going to go and sell their house, right? They make decisions on who to hire based on how much they believe that real estate agent can get them for their house. And that in and of itself is a great train of thought, but we have to make sure we're looking at the data reasonably. We're applying some market trends to that data so that you have an understanding of what's going to happen when your home hits the market at that specific point in time. Not what was going to happen 6 months ago or 6 years ago, what's happening right now. So I want to talk about that. I want to talk about the challenge that I think buyers and sellers have in this market right now. Last show, we were talking about this window of opportunity that I see in this market where, yes, more and more properties are coming on the market. They're staying on the market for a longer period of time. They're not getting as much money as they were in previous years, right? They're not getting as much of their listing price, I should say, as they were in previous years. And it's a challenging market for a seller, right? As they see more and more options hit the market that they're competing with. It's also challenging for buyers in that, finally they have more options, right? They have more negotiating power, but are the sellers willing to play ball? Some are, some aren't. I've had both experiences this week. I'll share some of that with you. And just some of the things that I'm seeing as an agent that's, in the field. Again, I've been doing this for 20 years. I have a team. I have a property management company, a private money lending company. I'm an investor as well. Really anything real estate related, I have my hands in. And it's because I love this stuff, right? It's all I've ever done. Even when I was 13 years old, painting fire lanes in shopping centers and pulling weeds in parking lots on my family's properties. It's just real estate's all I've ever done. It's what I enjoy. It's what I really, really understand, and love it when I have the opportunity to share that passion and that knowledge with folks that need really quality representation. So before we get into this, how do we value real estate? Just a few quick things. First of all, although I'm on radio, I video myself while I'm here. We put those videos on YouTube. We take the audio file, we turn it into a podcast, which is on iTunes and Spotify and Google Play and all that great stuff. So if you miss this show or only catch a portion of it, you can watch it, you can hear it. Just search for the Brian Beatty team, and I'm sure you'll find what you're looking for. But check us out on YouTube. We've got over 1,000 videos there. Some stuff that's not on this program is on there. And then our website, listingsincharleston.com. That's listingsincharleston.com. So, and I guess last thing, if you want to call or text me, you want to have a conversation with me, my number, which comes straight to me, by the way, it's not getting routed to some other random person in my team. My number is 843-800-0065. That's 843-800-0065. All right, so let's talk about how we determine value for property. When I'm sitting down with a seller and we're going through the process of discussing what they want out of their house and what they want this overall process to look like and how much they need to net in order for this to be a worthwhile decision and what they're looking for when they want to buy a new home and that whole big conversation, right? Cards on the table based conversation. Obviously, a big question is, well, how much is this house worth? Because I need to know not only what it's worth, but how much money I'm going to walk away with after the sale, right? And how much equity do I have in my house? Because that's going to help me determine how much home I can afford. So we have to begin with the end in mind. When we're looking at value, one thing that is really interesting, and I was mentioning this on Palmetto Talk Live yesterday morning, or Friday morning, because this plays Saturdays and Sundays, but we were talking about the challenge of determining value. And the first challenge is we have to make sure that we're operating with the correct data. And what I mean by that is, when I walk into somebody's house, or obviously much before that, when I'm doing my research on that particular property and area, right? I'm going to look at the tax records for that property. I'm also going to look in the MLS to see when the last time it was put in the MLS, because I want to see, hey, let's see if there's any older photos. Let me get a glimpse into what this property looked like when they bought it. And then, of course, ask questions and fill in information about what they've done to the property and how much that cost. And I can help them determine the value of those upgrades, so on and so forth. But the first thing that's really interesting, and there's a takeaway for you guys on this, is that the square footage for your house that's reported in tax records is often different than the square footage that was posted in the MLS or on all these websites when the property was last sold. And so which one is the right number, right? Well, obviously, if you're an owner and your tax records show that your square footage is lower than it actually is, well, that's a good thing. That means you're saving money on taxes. But if the tax records or the MLS listing are over-reporting your square footage, let's say, it says that it's 2,400 square feet, but your house is really only 2,280, right? And we're dealing with a property that's $400 a square foot. Well, that's a big difference. That's a really big difference. It's tens of thousands of dollars. And the challenge is this, and this is just me being honest, a lot of sellers choose their agent based on how much money that agent says they can get that seller. Oh, Brian, we really liked your presentation. We know you're super knowledgeable, blah, 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 but this agent said they could sell it for $10,000 more. That's, when we quote unquote lose an opportunity, it's usually for something like that, which is why I try as best I can to educate and inform people on the pricing process, because we have to have correct data, right? We have to actually understand how big the house is, because variances in that can mean big differences in what your home is actually worth. So that's the first thing, is how big is the house? Do we have any record of that? Do we have a measurement of the house? Do you have an old appraisal that shows a measurement of the house? Just using tax records or just using the MLS isn't good enough, because agents round up square footage sometimes. They're not supposed to, but they do, which is why, and the older a home is, it seems like the more that home has quote unquote grown over time. And it's because of the way agents round up or don't measure, and people don't correct them. They don't correct the listing in the MLS. That's also one of the reasons why, by the way, all these automated pricing tools are just, hey, it's a nice conversation starter, but there's no way in the world an automated pricing tool can actually tell you what your home is worth. It's not like they're going to come out and measure your house. And it's not like they have some sort of algorithm they've created to determine the value of your property based on your condition versus someone else's condition, or your level of motivation versus someone else's level of motivation, right? We talked about this last show, and I don't want to beat a dead horse, but that's essentially why automated pricing tools are just flawed. They're just flawed. They're not correct. They're a good conversation starter. They can get you close, but they're never to be relied on, in my opinion. Maybe not never, but certainly not right now. Right, so we need to determine, all right, what's the actual size of the house? If we don't know, we have to measure the house, because that's going to give us accurate pricing. Then we have to determine the strategy we're going to use, when we put that property on the market. And this is what trips a lot of people up. And this is why I'm going to take my time on this particular portion of this. I'm going to take a break. When we come back, we're going to talk about the 3 basic models that people use when they put their home on the market for sale. It's called the aspirational model, the market pricing model, and the event-based pricing model. So stick around. I'm going to discuss that in greater detail. You can figure out which category you would be in if you decided to sell your house. All that and more as the Brian Beatty Real Estate Show continues right here on the Big Talker, 1250 WTMA and WTMA.com. And of course, check us out online, listingsincharleston.com, listingsincharleston.com, or give me a call or text 843-800-0065. That's 843-800-0065. I always like to take a moment and just say that I really appreciate those of you that listen to this program, rely on the information within it to help shape your understanding of the real estate market and the trends within it, and appreciate those of you that reach out and ask questions and look for guidance. I'm happy to help in any way I can. Of course, we love earning business and we love helping people with the process of buying and selling and investing in real estate, or helping them manage one of their properties if it's a rental. But I'm also happy to just answer questions, general knowledge questions, be a resource for you. Maybe you need a good contractor. Maybe you want me to take a look at an investment deal that you're in right now and help you analyze it, determine whether it makes sense for you to move forward or not. Happy to help in any way I can. My number, 843-800-0065. That's how you reach me. Call or text 843-800-0065, 843-800-0065, or check us out online, listingsincharleston.com. That's listingsincharleston.com. So we were talking before we left about how we really determine what a house is worth, right? It's really challenging in this market because it seems like the market is moving, it's shifting, it is. But how do we hit a moving target? How do we determine what a property is worth and get to the point where we're not leaving money on the table, right? We're not underselling the property, but we're also not shooting so far past the target that we sit on the market for longer than we need to. It then ends up hurting us as time goes by. Number one, because the listing gets stale, because less people are interested over time. And then you have to take into account the fact that you've got market trends that are not really favorable for sellers right now. It's promoting the buyer side right now because more and more properties are hitting the market, right? We've had a big increase in the number of homes for sale that are on the market. We've got basically a little more than 1,000 more properties for sale now than we did this time last year. It's up about 25%, 23%. And we're going to get more into the market. I don't want to get too far down a rabbit hole here because you guys know how I love my data and numbers and just the analysis of the market to help people understand what's happening. But when it comes to determining value, right? I want to help you understand one thing too. Real estate data is old data. Here's what I mean by that. If I'm looking at determining value for your house, I'm going to look at what has sold within the past 6 months. Okay? Obviously, the sooner, the closer to now, the better, right? If something sold last week, that's much better than something that sold 6 months ago. But we have to go back about 6 months because that's usually what gives us enough comparable sales of similar properties to draw some conclusions about what those people paid for them and what someone will likely pay for your house now. Here's the challenge. If I'm looking at something that sold 6 months ago, it was under contract for, let's just call it 2 months before that. That means that the price for that property was determined 8 months ago. It also means that when they were analyzing properties to determine how much to offer, they were looking at sales 6 months prior to that. So now you've got this big lag in data. We're looking at things that were sales from a year ago to justify the sale of a property today. We have to make adjustments for changes in the market. And most agents don't do that. They just take the list of homes that are comparable to yours and they say, hey, here's the range for the price per square foot that these properties sold within. You're a little nicer than average. You're above average, in my opinion. So we're going to put above average price per square foot on the property. It should sell for around this. Like, I guess on one hand, for the seller that really doesn't understand the process or hasn't listened to this show, that could seem like a reasonable approach, right? But it's not. It's the lazy approach. The approach that works best in determining value is to, of course, look at things that have sold that are most comparable to yours as close to today as possible, right? We don't want to go back any further than 6 months. We'd like to stay within 3 months if we can. And then once we've determined the properties that have sold, right, or that are under contract, so long as we can understand what those contract amounts are, then we make adjustments. And this is where everybody gets tripped up. Agents, sellers, or they just don't do it, which would be kind of crazy. But I've been doing this for 20 years. I've seen quite a lot. And it happens a lot more than you think, right? This lazy approach to pricing. And it's not fair to the seller, by the way, because this is an expensive asset. You've got a lot of money tied up into this house, and frankly, every penny counts. And there's no excuse for ignorance or lack of experience. Why should that cost you money? Maybe something to consider. All right. When we're talking about value, we have to make adjustments, right? Do you have a screened porch and the other homes don't? Do you have a fence and they don't? Do you have a 3-car garage when they have a 2? How's the condition of your home? How the quality of your finishes? Do you have more bedrooms than they do? Is your roof new and theirs is old? Is your HVAC new and theirs is old? All of these things, right, help with determining value. You just have to understand the amount of the adjustment to make, which frankly comes with time and experience. I have looked at tens of thousands of appraisals. I have a pretty good understanding of what people believe things are worth. And when I say people, what I mean is like banks, appraisers, right? They have a really good handle on what that home is worth on paper. And that's great. That gives us a benchmark, right? It's appraised for X, but that's not necessarily what a buyer's going to pay for it, because they're going to take into account all the things that are tough to calculate, things like consumer confidence, things like fear that maybe they buy something and then this time next year it's worth less than what they bought it for. And then this kind of slow moving but constant train starts rolling down the tracks of price depreciation. I'm not necessarily saying that's going to happen, but that is a legitimate fear that people have right now, which is what is causing them to straddle the fence. They're also acutely aware of value. Buyers are, right? They can go online because they've been probably looking for homes for a while now. Very rarely do buyers kind of get into the stage of, you know what, I'm in this transactional stage of my life where if I see the right house, I'm going to buy it. Very rarely do people spend like a week or two in that stage. It's usually like 90 days, right? Meaning, if I see something I like, I'm going to buy it. That amount of time that person stays in that frame of mind is usually around 90 days or so. In fact, from the time somebody starts looking at property until the time they actually buy a home, the average amount of time somebody shops is 13 months. A lot of people don't realize that. But anyways, we make all these adjustments for the things that your home has or doesn't have in comparison to the other properties. And then we determine what kind of model we want to use. There's 3 types. There's the aspirational model, there's the market value model, and then there's event-based pricing model. So the aspirational model, frankly, is what most people do. Or it's what most people want. I'll put it that way. The aspirational model says, hey, I don't have to sell my house. No one's pushing me out the door. I'm not in a huge rush. I'm not willing to leave money on the table. I'm certainly not going to underprice my property. So if I'm going to sell it, it's got to be worth it to me. So I want more than what these properties have sold for recently. This is my, pie in the sky price. If I get this price, I am elated. I am over the moon. We usually use aspirational based pricing on properties that are really unique, or are in incredible condition, or have characteristics to the property that you just are really hard to find. Or we use that when there's a lack of sales data, right? Maybe there haven't been many sales in that area. Maybe you're selling a unique property and there really just isn't enough comparable data for anybody to reasonably say this is what your home is worth. In instances like that, you can use the lack of data to your advantage to push the envelope on pricing and maybe ask a little bit more, because who's to say it's not worth that much? It's not like there's a ton of sales that have occurred that are similar to that property to say otherwise, right? So that's the aspirational model. If it doesn't sell, usually it's price related. You have to reduce your price down to market level pricing, which is what, frankly, most people do. And that the people that are choosing market-based pricing right now are the people that are selling for full asking price, and a third of them are selling for above asking price in a week. That's the stat right now. The people that are using the aspirational model are selling for 93% of their asking price in 100 days. And we have the data to prove it. We hired a company to analyze the impact on a seller's bottom line based on the initial asking price that they chose in relation to fair market value. And the data is overwhelming in that the higher you go above what that property is worth, the longer it's going to sit, and ultimately the less money you're going to make, because you're going to have to make concessions and adjustments and negotiate more heavily, maybe pay closing costs, so on and so forth. Market-based pricing is exactly what it sounds like. You price the home at what it's worth. You work on the condition of the home. You hire a good real estate agent that really understands marketing and positioning, and they help you through the process. Event-based pricing is when you underprice the property a little bit, right? You're creating this event and people see it, they swoop in, you generate a multiple offer situation. That is more risky to do right now because of the ebbs and flows of the market and because of the uncertainty in the market. It can work, however, in both ends of the spectrum, right? The aspirational model and the event-based pricing model. I've seen both just this week. I saw one seller that has had their home on the market. It's been on and off the market 2 or 3 times. We made them, it's way overpriced, by the way, way overpriced. They're basically, they need almost a full renovation, and they are priced at other homes that have been fully renovated, and homes that have been fully renovated are bigger and they're the same price. So this person's way overpriced. So we made an offer. We justified it. We helped them understand the math, understand where we're coming from. They came down $5,000, which was like 0.5%. So obviously that house is just going to sit until at some point that seller has a rude awakening and they realize, wow, if I'd have just been more negotiable now, I would have made more money, because now I've been on the market a long time. The market's gotten a little worse and I'm actually having to sell it for less than what that offer came in at. That's a challenge that sellers have in this market right now. I've also been on the other side of the spectrum where we had a property that hit the market. I'm working with a great couple. They're looking for something for their daughter. They want to make it an investment property. Perfect home hit the market. That day, first day on the market, there were 3 other people that were there or that tried to get in while we had our 30-minute showing. I mean, it was like an open house. There were a ton of people there. And that is an awesome strategy, by the way, is just to stack up showings, because it creates urgency. And we certainly had it, and we made an offer that day. And I have no doubt that today we'll be in a multiple offer situation. It'll have to go through the weekend and blah, blah, blah. But that's the two tails of the market, right? We've got these folks that are priced well, that are marketed well, that are working with a quality agent that knows how to guide them through the process. And they're selling quickly, and they're getting their asking price, so long as it's actually priced correctly. Then you've got the other side. You've got the folks that it's almost like they're working with somebody that either doesn't have a clue, or the seller wants what they want. They're not willing to budge. Doesn't matter how good the real estate agent is. No agent can sell a property that's substantially overpriced. I mean, how do you explain to a buyer that they're going to have to pay 30% more than everybody else has paid for the same property, when in all likelihood something else very similar will probably hit the market soon at 30% less than what they're asking, right? It's just an outlier, but we're starting to see more and more of them. So in terms of determining value, we have to determine, just a quick summary, how big is your actual house, right? We need to operate with correct factual information, right? That's the baseline. Then we have to make adjustments for all the things your home has or doesn't have in comparison to the other like-kind properties that we've identified. And then we have to choose the model that we're going to employ and build a marketing strategy around to help you sell your property. Are we going to slightly underprice it, generate a bidding war? Are we going to price it at what it's worth or close to it and sell it in, a week for full asking price? Or are we going to overprice it, quote unquote, leave room for negotiation, which is what most people say? And are we going to get lucky, right? Is the right buyer at the right time going to see that property and be so excited that they pay more than other people have been willing to pay for the same thing, right? There's got to be some luck involved there. If that doesn't work in around 30 days or so, then you're looking at a price reduction, which isn't the end of the world, by the way. People put too much weight on price reductions, and that if I have to reduce my price, then it's automatically this blood in the water. Sharks are going to circle me, and I'm going to sell my home for only 10% of what it's worth. That's just not how it works. I want to talk about incentives, things that real estate agents say to get you to contact them or to ultimately earn your business, right? I've had several incentives over this 20-year career that I've had in real estate, but I've never had one that in my mind was deceitful in nature, just to get you to call and then bait and switch you. And that's what some of these incentives really do. And so I want to explain how some of these incentives work so that you don't get the wool pulled over your eyes, so that you don't waste your time. Now, you're welcome to go down these rabbit holes yourself. I'm going to give you the benefit of my experience on this one as somebody that's, again, done this all day, every day for 20 years. So the big one right now, and first let me just say, if you would like information on our incentives, whether it's, a 2.4% commission or it's, the higher end of our commission, we have a commission menu, right? We have varying levels of service and associated pricing, or buying and selling a home with us locally. We'll move you for free. Communication guarantee, easy exit guarantee, all these other things we do are all in writing. They're very easy to understand. But what has changed in this market recently is everybody is now offering a get a cash offer now type incentive. And it's become a frustration, if I'm being honest, because in the overwhelming majority of instances, whether it's on somebody's website or like even in the MLS, when I go and I do an analysis of a property to determine what it's worth, and I create what's called a CMA, a comparative market analysis, and we use our little software program to do that, Open Door, which is essentially a competitor of ours, right? They go and they buy properties for cash. They have ties to the CMA software we use, basically, that says, hey, this home qualifies for a cash offer, or it doesn't. And then here's about the range of what that cash offer would be. And it's irritating in that everybody is seeing get a cash offer for your house, or guaranteed cash offer in 24 hours, or, if your home doesn't sell, I'll buy it for cash. Here's the reality. There's nobody out there, no company out there that's going to pay you full price cash for your house. Sorry, it's just not a good business model. And the reality is, as soon as you buy something, there's cost associated with buying it. There's cost associated with holding it. There's cost associated with selling it, right? So it is completely unreasonable to assume that a company is going to come in and write you a check for full market value for your house. You might be able to find an end user buyer, right? Someone that's going to live in the property to pay you full price cash, but it's not like there's this website full of buyers paying cash willing to pay full price for property. So that must mean that in turn for getting cash for your house, that there's some sort of incentive for them too, right? Some sort of discount. This is the way things usually work. They see a website, all these industry disruptors are out there, right? There are God knows how many websites with a get a cash offer now widget on it, right? And you go and you click on the button and you enter in all this information because you think you're about to get a cash offer. And then it basically is like, hey, thanks a lot for all this information on your house. This agent will be in touch with you soon to discuss a cash offer. And then they'll call you and they'll be like, oh, great. Well, yeah, when can we meet and walk through the property so I can see it? And, from there, we'll be able to determine what the cash offer amount is, right? So then you agree to a meeting. And then they come to the house and they walk through and they say, okay, well, yeah, here's what your cash offer looks like. And, it's going to be about 80% of the actual value of the home. They're probably going to take about 20% off. And by the way, they have the right to an inspection and they have the right to negotiate based on the findings of that inspection. I forgot to mention this too, but there's a 5% service fee that they charge, right? How that's different from, you're literally, for these companies that are writing you a check to buy your house, you're paying them a 5% service fee when you could have paid a 5% commission, hired an agent, sold the house for way more money, and actually gotten representation. But I get it. Some people like the easy button. If it costs them 10, 20, 250 grand, who cares? I've never understood that mentality. I really haven't. But I understand people get into desperate situations. Call me. I'll buy your house. I've got plenty of other folks that will buy your house, and we have plenty of buyers that are looking for things that will pay you significantly more for your house. But I digress. All these get a cash offer now offers are from investment groups, either local or national, and they're going to pay you, 25 to 30. They're going to take 25 to 35% off of the value of your house. And once you realize that as a homeowner, you're going to be like, well, why in the world would I do that? And then the agents can say, exactly. Now let me tell you about just working with me as your everyday real estate agent and finding a buyer and marketing your home and blah, blah, blah. And it's this perfect foot in the door technique, right? They know you're not going to take 30% off of your home. But the reason I'm telling you this is that you understand now that someone's not coming with a check in their pocket for full value cash for your house. It's just not, the incentive doesn't work that way. But the problem is the advertising of it is a little shady. And that's what gets people to explore their curiosity. They end up submitting information and then they get bombarded by, real estate agents and all these companies that sell your information to God knows who else and blah, blah, blah. And then all of a sudden your phone's ringing off the hook like mine is, with 40 freaking spam calls a day. Anywho, that's one incentive, which is get cash now, right? There is a cost to that. It's going to be 25, 35% off of what the house is worth. If you have a situation where you really need to sell and that's something you'd entertain, I'd much rather see you sell it to a local investor that understands the market, that isn't going to beat you up to improve their margin by a sliver to help keep their stakeholders happy. In other words, I'll buy your house. If you're in that kind of situation, give me a call, 843-800-0065, 843-800-0065, or go to our website, listingsincharleston.com. And if you really need to sell your house that quickly, we can help you and do better than just selling to some sort of conglomerate of investors, right? The other incentive, just in covering some ground here, is if your home doesn't sell, I'll buy it. Or if your home doesn't sell, it's no commission. Right? Well, obviously, if it doesn't sell, there's no commission. There's nothing to charge because the deal didn't get done. But if I don't sell your home, I'll buy it. Let's talk about that incentive for a minute. First of all, and again, agents are not going to buy your house for what your house is worth. There's a cost to buy it. There's a cost to hold it. There's a cost to sell it. Even if I did something magical in terms of timing, it's still going to cost me 10%. Right? The cost to buy, the cost to hold, the cost to sell, that's about 10% of the value of the property. Because I have to pay commissions, right? I've got all my closing costs, so on and so forth. So even if I went and just bought your house today and then immediately tried to resell it, I'm going to lose 10% of my money, which is why the business model doesn't work, which is why erase that from your understand that no one's out there paying you full price for your house as some sort of investor or agent-based incentive. It's just not going to work that way. What they will do, however, is they'll say, all right, well, in order for me to buy your house, here's the price that I can afford to pay. Right? And again, it's going to be like 30% off, somewhere around there. But if I'm going to, be at risk and responsible for purchasing your property if it doesn't sell within a certain amount of time, then I want to charge you a higher commission in return for that risk. So that's one way that they can try to justify charging you more commission, is because they're taking on the risk. And if it doesn't sell, they're going to buy it anyways. Well, again, buy it at their price, not yours, which is going to be 70% of what it's worth. They're also going to have some pretty strict rules in there with regard to pricing. They're going to say something like, you have to pay for a measurement of your house. You have to pay for an appraisal of your house. You have to price your home within, X percentage points of that appraisal. You have to agree to a pricing reduction strategy every 2 weeks. If an inspection report's done, you have to fix everything on the report. I mean, some of the hoops that you have to jump through are like, you're reading through this and you're reading, it's like, what? This is ridiculous. Why would anybody agree to this? And then they say, okay, well then let's just talk about doing things in a traditional sense, right? Blah, blah, blah. Another foot in the door technique. So I share these things with you to help you be more educated, more aware about how some of these agents are going to coerce you into contacting them, how they're going to take you down this sales funnel they've built that ultimately ends with them wanting a higher commission and a property that is, the owner's motivated, they want to sell, and they're obviously open to maybe taking less than what the property is worth, right? That to them is a really good listing. In fact, it is a good listing, right? Somebody that's motivated to sell, that's open-minded. But that's also where a lot of people get taken advantage of. That's also when properties are undersold. That's also when, even a great property with a lazy subpar agent can still sell in this market, but are you getting the most money for it? Are you really using everything to your advantage to put as much money as possible in or to keep as much equity as possible? That's a better way of putting it. So we're going to talk a little bit more about a few different strategies and just some things that are top of mind for me when we come back. But if you would like more information on what we do specifically to sell real estate without the, all of these cloak and dagger, smoke and mirror incentives, right? I'm an honest, hardworking real estate agent that's been doing this for 20 years, that has sold 1,500 homes, that will still sit down with you at your kitchen table and walk through this process and be your dedicated agent. So if that's something I can help you with, 843-800-0065 is my number, 843-800-0065. Or check us out online, listingsincharleston.com. That's listingsincharleston.com. There's been a lot of discussion recently about the trajectory of the real estate market. Is it flattening out? Is it going down? It's really tough to say right now. A lot of people really want that information. They want that answer before they decide, right, whether they're actually going to buy and or sell a home or not. And I want you guys to understand that real estate moves slowly. Aside from major economic events, real estate's a lagging indicator of the economy, right? It moves fairly slowly. And that's, I think, exactly what you're seeing right now. What's interesting is, we look at things like the number of properties on the market for sale being up over 30% compared to this time last year, or the amount of time it's taking. It's up about 23%, but the amount of time it's taking for those properties to sell is up over 30%. We look at closings being, like the number of homes that are selling being pretty much flat for the past 3 Mays in a row, right? We're between 17 and 1,800 sales a month. And all of this is happening while prices are continuously inching higher and higher and higher and higher compared to this time last year. But what's interesting is the rate at which properties are appreciating, right? That has slowed way down almost to a screeching halt. In fact, in some price ranges, values are actually lower than they were this time last year. It's already started to happen in some areas of Charleston. And so what this does is it just creates confusion. And nobody really likes to be in a market without a proper sense of direction, right? Up or down. They don't like no man's land, which is kind of where we are right now. But again, like I was mentioning last show, and I want to harp on this for just a moment, there's a window of opportunity right now. You have folks that have had their home on the market that for a lot of folks that are looking to buy a house right now. I was mentioning this to another listener who I met with. A lot of what's on the market right now is almost like the leftovers so to speak. And I know that doesn't sound great. And I'm sorry if you're one of them. But a lot of the properties that hit the market in the spring, when everybody has been coached, like, hey, we got to get our home on the market in the spring. That's when everything is the busiest, right? Well, if a bunch of those homes sold, but yours still remains and you kind of miss the bus, then that gives buyers a little more comfort level in lowballing you, right? Because you're still on the market, you haven't sold. Obviously, something happened, whether you weren't priced correctly or maybe there were issues with the house or who knows why it didn't sell, but for whatever reason, it didn't. And now you've been on the market for 90 plus days. There's not a ton of new properties hitting the market because we're about to enter this weird lull where, people are going on family vacations and it's summer. And, if somebody wanted to be in before school started, they probably have already put that home under contract. So that window is tightly closing. Not to say that it's closed, but it's closing pretty quickly. And so, you've got this kind of confusion in the market. But why are prices still going up? It's because we're comparing things to last year. Remember how I was talking about the lag in real estate data? Basically, from my perspective, prices aren't going up anymore. Prices are flat. In fact, in some areas, they're coming down. And so that might help prompt your decision as to whether the timing makes sense for you to do something now or for you to wait, because a rising tide lifts all boats. Just like a receding tide is going to bring things down. If you need to sell your home in order to buy another, you might get a better deal now on the one you're buying. But over time, if we enter a correctionary phase in our market where prices start to deflate, obviously the value of your home is going to start to go down. Your equity is going to start to get diminished. So you're going to have to make that up when you buy the property. What's interesting right now is that you've got the ability to actually sell and maintain a bunch of your equity because we're at the very tail end of the seller's market here. Right? So you have the ability to still price appropriately, even sometimes a little aggressively, get that price, work with somebody that knows what they're doing, and then go and find a property that's been on the market for a while and get a good deal on something. That's kind of the exciting part, is that no one's really been able to get a good quote unquote deal on a home they've bought for a long time, like 10 years. And so now you have more and more options. If you'd like to see some of those options, you want to talk about off-market opportunities, or if you're just looking for a really quality real estate agent to help you with this process, my number is 843-800-0065, 843-800-0065, or listingsincharleston.com. Thanks a lot, guys. Enjoy your weekend. Thanks for listening to the Brian Beatty Real Estate Show.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-800-0065. That's 843-800-0065.